On January 23, 2025, history shifted. President Trump signed an executive order establishing a strategic Bitcoin reserve. If you watched the mainstream news, you were told this was a victory for American innovation, a pro-crypto policy designed to modernize the financial system. Wall Street cheered. The price of Bitcoin reacted instantly, piercing the $100,000 mark. The narrative was celebration. But the narrative was wrong. This wasn't a policy update. This was a declaration of war, not a kinetic war with missiles and tanks, but an economic war, a currency war. It was a formal announcement that the United States intends to weaponize Bitcoin exactly the way it weaponized the US dollar for the last 75 years. While American retail investors were celebrating green candles on a chart, the real reaction was happening 7,000 miles away in Beijing. Within 72 hours of the signing, the Chinese Communist Party convened an emergency session of the Politburo Standing Committee. These are the 7 men who control the world's second-largest economy. They did not meet to discuss Taiwan. They did not meet to discuss trade tariffs. They met to discuss Bitcoin. They understood immediately what most Western analysts missed. The U.S. executive order was an existential threat to Chinese sovereignty. If America monopolizes the future standard of digital value, China remains a vassal to Washington's financial power forever. Beijing knows they cannot let that happen. And so, they have begun to move. Quietly, aggressively. What is unfolding right now is a nation-state arms race for digital scarcity. It is a shadow war between the 2 largest superpowers on Earth, competing for control of the next global reserve asset. Over the next 17 minutes, I am going to show you the reality of this conflict. We will look at the specific countermeasures China is deploying right now, from secret mining operations in Inner Mongolia to sovereign wealth fund proxies in Singapore. We will look at the timeline of how this escalates from 2025 to 2028. This is not speculation about price targets. This is an analysis of geopolitical survival. The currency war has begun, and you are standing on the battlefield. To understand the Chinese response, you first have to understand the trap they are trying to escape. For 3/4 of a century, the United States has held the exorbitant privilege. The US dollar is the world's reserve currency. Roughly 60% of global central bank reserves are in dollars. 70% of global trade is settled in dollars. This isn't just about economics. It is about control. If you want to buy oil, you need dollars. If you want to use the SWIFT banking system, you need dollars. And if Washington decides you are an enemy, they can turn that system off. We saw it with sanctions on Russia. We saw it with Iran. We saw it when the US froze Afghanistan's reserves. Every time the US weaponizes the dollar, the rest of the world takes a note. China has spent decades trying to internationalize the UN to break this dependency. They created swap lines. They pushed for inclusion in the IMF. They tried to settle oil trades in yuan, but it failed. The yuan makes up less than 3% of global reserves. Why? Because nobody trusts the Chinese Communist Party. They manipulate the currency, they trap capital, and they rewrite the rules overnight. The world hates American dominance, but they fear Chinese manipulation more. Enter Bitcoin. Bitcoin is the first neutral monetary asset in history. It is stateless. It is decentralized. It has a fixed supply that no central bank can inflate. For years, China viewed Bitcoin as a nuisance, but now they view it as a strategic imperative. Bitcoin represents the only path to de-dollarization that doesn't require the world to trust Beijing. It allows for a financial system where trade is settled in a neutral asset rather than an American weapon. But here is the danger. If the United States executes on Trump's order, if America accumulates 1 million Bitcoin before China acts, then Bitcoin ceases to be a neutral alternative. It becomes a proxy for the US dollar. It becomes another American asset that can be leveraged against China. This is why the Politburo panicked. They realized that if they stay on the sidelines, they lose twice. They lose the dollar system they are trying to escape, and they lose the Bitcoin alternative that could have replaced it. They are backed into a corner. And a superpower backed into a corner does not surrender. It escalates. The Chinese response is already underway. operating on four distinct fronts simultaneously. The first front is mining. In 2021, China famously banned Bitcoin mining. The official story was about carbon targets and energy consumption. The real story was about capital flight. But while they crushed the private sector, the state never stopped. Intelligence indicates that state-owned enterprises and military-adjacent technology firms continued mining operations in secure locations, Inner Mongolia, Xinjiang, and Sichuan. They utilized hydropower during the rainy season and coal in the remote west. This hash rate was hidden, routed through VPNs, but the Bitcoin generated went directly into wallets controlled by the People's Liberation Army Strategic Support Force. This is the unit responsible for cyber warfare. They treat Bitcoin reserves with the same security protocols as nuclear launch codes. Since the Trump executive order, the gloves have come off. Provincial governments have received new, quiet directives. Surplus power is to be directed to mining. China generates 28,000 terawatt-hours of electricity annually, more than the US and India combined. Much of this power is stranded in remote regions. It is now being weaponized to hash. Their goal is to reclaim 20% to 30% of the global hash rate by 2026. This would allow them to generate 50,000 new Bitcoin per year, exclusively for the state. The second front is open market acquisition. China holds $3.2 trillion in foreign exchange reserves. They have been dumping U.S. treasuries for years, reducing holdings from $1.3 trillion to roughly $730 billion. They have been rotating that capital into gold, but gold is heavy, slow, and hard to transport physically. Since late January 2025, Chinese state-controlled entities began hitting the over-the-counter, or OTC, markets. They aren't buying on Binance or Coinbase. They are using shell companies in Singapore, Hong Kong, and Switzerland to buy Bitcoin off-book to avoid spiking the price. Estimates suggest they have already swept up 50,000 to 80,000 Bitcoin in the weeks following Trump's order. They have authorized a war chest of up to $30 billion for acquisition over the next 3 years. The third front is the digital yuan. China's central bank digital currency has been a domestic success, but an international failure because it is surveillance money. Trump's order gave them a new strategy, the Bitcoin backstop. China is preparing to position the digital yuan as a currency partially backed by Bitcoin. The proposition to the world is simple. Use our digital yuan for trade. It is faster than the dollar, and unlike the dollar, it is redeemable for a hard asset. This creates a currency that is technically superior to the fiat dollar. It appeals to nations like Russia, Iran, and Venezuela, who are desperate to trade outside the U.S. banking system. The fourth front is the BRICS alliance. This is the geopolitical checkmate. The BRICS, nations, Brazil, Russia, India, China, South Africa, and now the UAE, Iran, and others, are coordinating. China is proposing a collective BRICS Bitcoin reserve. Think of it like the IMF, but instead of paper promises, members contribute Bitcoin to a shared liquidity pool based on their GDP. China contributes 40%, India 15%, Russia 10%. This pool would facilitate trade between member nations, completely bypassing the US dollar. To see where this is going, we have to look back at where we came from. The year was 1944. Bretton Woods, New Hampshire. The Allied powers met to design the post-World War II financial order. There were two competing visions. The British economist John Maynard Keynes proposed a neutral global currency called the Bancor, backed by a basket of commodities. He wanted a system where no single country dominated. The Americans, led by Harry Dexter White, said no. They proposed the dollar. They promised the dollar would be as good as gold, pegged at $35 an ounce. Because the U.S. held all the gold and all the military power, they won. The world adopted the dollar. It worked for 27 years until the U.S. started cheating. Spending on the Vietnam War and domestic welfare programs forced the U.S. to print more dollars than they had gold. In 1971, Nixon closed the gold window. The dollar became pure fiat, backed by nothing. China has studied this history extensively. They know that unipolar dominance leads to abuse. They are not trying to replace the dollar with the yuan. They know the world won't accept Chinese hegemony any more than American hegemony. Instead, they are trying to resurrect Keynes's vision. In this historical parallel, Bitcoin is the Bancor. It is the neutral asset. China wants a multipolar world where the dollar, the yuan, and the euro compete, but they all settle final accounts in Bitcoin. This is the long game. The US is playing a 4-year election cycle game. China is playing a 100-year dynasty game. So, how does this play out? Let's run the simulation based on current trajectories. Phase 1, the opening moves, 2025. Following the executive order, the market enters a period of high confusion. Nation-states move in the shadows. Russia announces it will accept Bitcoin for oil and gas. Saudi Arabia, playing both sides, begins allocating a percentage of its sovereign wealth fund into digital assets. By the end of 2025, the US government holds approximately 150,000 Bitcoin. China matches them with 150,000 Bitcoin through mining and proxy buys. The price creates a high floor. Volatility is high, but the asset class has been legitimized by the world's largest powers. Phase 2, the acceleration, 2026. The United States Treasury authorizes open market purchases. The Federal Reserve creates a custody facility. The U.S. holdings swell to 400,000 Bitcoin. China responds by aggressively ramping up mining hash rate, aiming to control the network security layer. The BRICS reserve is formalized. Russia and Iran begin industrial-scale mining using flared natural gas. By the end of 2026, we see the first real petro-Bitcoin transactions. 15% of global oil trade is settled in Bitcoin or Bitcoin-backed instruments. The demand shock is no longer speculative, it is structural. Phase 3, the crisis, 2027. This is the inflection point. Bitcoin prices have surged past $300,000 due to supply constraints. Retail investors are priced out. The U.S. deficit is spiraling, forcing the Fed to print aggressively to buy treasuries. The dollar weakens. China officially announces the convertibility of the digital yuan into Bitcoin. This triggers a rush of adoption in the global south. The dollar's share of global reserves dips below 50% for the first time since WW2. It is a psychological blow to American prestige. Phase 4, the new order, 2028. The world has bifurcated. We have the Western Bloc, dollar-based, NATO-aligned, and the Eastern Bloc, BRICS-based, utilizing Bitcoin-backed distinct currencies. Bitcoin stabilizes between $500,000 and $1 million per coin. It has become the settlement layer between these two hostile blocs. When China trades with Germany, they don't use dollars. They don't use yuan. They settle the balance in Bitcoin. In this scenario, who wins? China wins because they broke the dollar monopoly. Russia wins because they bypassed sanctions. Early Bitcoin holders win because they front-ran the nation-states. Who loses? The U.S. government loses its absolute power to sanction. Holders of unhedged fiat currency lose purchasing power as inflation runs hot to pay for the debt. And the skeptics, those who sold at $50,000 or $60,000, lose out on the greatest wealth transfer in human history. This brings us to the most important question. What do you do? First, you must accept the paradigm shift. Your personal opinion on crypto is irrelevant. The US and China are competing for it. When the two largest entities on Earth fight over a fixed supply asset, the price only goes one way. The math of supply and demand is undefeated. Second, accumulation is not enough. You must focus on sovereignty. If Bitcoin is a weapon of war, governments will try to restrict it. America will demand strict KYC. China will demand state custody. You must move your assets off exchanges. Self-custody, using hardware wallets and multi-signature setups, is the only way to ensure your wealth cannot be frozen by a panicked government. Third, diversification. You are watching a currency war. That means currency volatility. You should hold Bitcoin as your growth asset, but you should hold gold as your insurance. Central banks are buying both. Do what they do, not what they say. A 10-20% allocation to gold acts as a stabilizer if the digital infrastructure faces cyber attacks. Fourth, ignore the noise. In the coming years, you will see wild swings. Bitcoin will pump to $200,000, crash to $120,000, and rip to $350,000. These moves will be driven by regulatory announcements and geopolitical bluffing. Do not trade these swings. You cannot outtrade a nation-state. You simply have to hold the asset they are fighting over. We are living through a moment that will be written about in history books for the next century. Trump's executive order was the first shot. China's mobilization is the response. The illusion of magic internet money is over. This is now a matter of national security for the superpowers. The timeline is set. 2025 is positioning. 2026 is acceleration. 2027 is the breaking point. If you understand this, you are ahead of 99% of the market. You aren't looking at charts. You are looking at the board game of global power. The winner of this war isn't clear yet, but the outcome for the asset is. Bitcoin wins. The only variable is whether you will be holding the asset the world wants or the paper money the losers are printing. If you want to track the real signals of this currency war, the moves by the Politburo, the BRICS announcements, the Treasury shifts, make sure you are subscribed to this channel. I will be documenting every step of the conflict as the new monetary order is built in real time. The war has begun. Position yourself accordingly.